Proud supporters of Africa this week. Engen, with us, you are number one.
In the program today, we discuss Nigeria's oil industry ownership reform. Then we talk to the governor of Rivers State about the oil industry and economic development. Later, we discuss tourism investment as well as freight industry in Africa. The governor of the South African Reserve Bank, Gill Marcus, has not changed the interest rate despite a gloomy outlook for inflation. Inflation is expected to average 5.1% this year and 6% next year. This is higher than the forecast at the last MPC meeting. Growth for the South African economy is forecast down to 3.6% this year and 3.9% next year.
The winter skies over Pretoria were bright.
The inflation outlook has deteriorated further.
Inside the Reserve Bank, the prospects for inflation were not so bright. Inflation is forecast to breach the 6% upper limit of the inflation target band by the last quarter of this year.
I thought that we'd set that out quite carefully in our statement. We're saying that there is a temporary breach as things stand, and obviously the assumptions are constantly reviewed depending on the change of data. As things move forward. But the pressures are cost push pressures, and therefore we do not think it's appropriate to raise rates at this point in time.
A problem for the Reserve Bank has been the oil price. When it set inflation targets, it was on the assumption that oil would be at $90 a barrel. But by the first MPC decision of the year in January, oil had gone up to $97.50. Unrest in North Africa has sent the price soaring. On the eve of the last decision on March the 23rd, the price had climbed to $115. On the day of this decision, it had eased to $112, but it is still a concern.
It depends on what happens. The fall has been a couple of days. And I think what it does emphasize is the uncertainty in the environment that we're all dealing with, because it's reacting to all kinds of issues. The question of the monetary policy stance of the United States, the question of peripheral countries in Europe. So there's a whole lot of issues around that. What we would do, as we said, is monitor it very closely, and we will see whether this is a sustained position.
It means tough decisions for the Reserve Bank in the coming months.
So inflation is still a major concern, as it's expected to breach its upper limit of the target band. But still, the Reserve Bank governor hasn't reached for an interest rate change, and some economists believe she may not do so until the first quarter of next year. Chris Bishop for CNBC Africa at the Reserve Bank in Pretoria.
As it focuses on its larger assets, oil major Shell has sold a $600 million or 45% stake in a Nigerian oil block to a Polish-Nigerian consortium. The winning bid takes local participation one step further by also giving a direct stake to local communities. Hakim Adedeji, head of oil and gas client coverage at FCMB Capital Markets, explained Nigeria's local ownership model.
The view is that Shell clearly is trying to rationalize its assets. I mean, if you understand where Shell is coming from, I mean, from about 1937 or so, they've had, I mean, at that point in time, they had the whole of Nigeria, you know, and gradually other players have come in over the last 50 years. And Shell has ended up with still the majority of the assets in Nigeria with small oil fields and large oil fields. So you have oil fields producing 3,000 barrels a day. You have oil fields producing 200,000 barrels a day. And globally, Shell has felt that it has a need to rationalize its assets so that it can put more control, put more focus on the larger assets, and thereby sell off the smaller assets to Nigerians in the spirit of the liberalization that is going on in Nigeria today.
Obviously, Shell's got assets somewhere in the region of $150 million up to about $2 billion that are on sale. Any local players that have indicated that they're interested?
Oh yes, most of the concessions have been. I mean, to date, I think they've sold, or rather, they have signed SPAs with about 4 or 5. Players. This is in this current round, the round of 4 oil blocks and the 2 previous rounds. And most of them are Nigerians. All of them are Nigerians, with clearly, with international partnership.
Okay, let's talk about how Shell has been operating in Nigeria. As you say, they've been the international company that's really dominated the space, but they've had some sort of a tacit agreement and a joint venture in some areas with the National Petroleum Corporation of Nigeria, also with Ajib Nigeria, Total. How are some of these partners responding to these asset sales?
I think they're responding well. Mind you, what has been put up for sale is the joint ownership in these concessions of Shell, Ajib, as well as Total. So essentially you have about 45% thereabouts of the interests belonging to the three players being sold. Then you have the NNPC on the other hand, holding 55% of the assets. NNPC, we have heard that NNPC has the right, clearly NNPC has the right to preempt these sales, but to the best of my knowledge, NNPC hasn't preempted any of the sales. And, I think the sales will go through, at least for now.
I want to talk about this liberalization that really would be manifest under the Petroleum Industry Bill once it's passed. There is a huge emphasis right now in Nigeria on getting local ownership on the very strategic resource that is oil, which many Nigerians feel is their birthright. In the context of some of these reforms, it's also been said that authorities have urged companies to suspend any new programs that they'd be investing in so that ultimately the space starts to create entry for local companies. So in many ways, some could argue that there's a changing tide of liberalization and indigenization in Nigeria that's ultimately going to force a lot of the international oil companies to take a step back.
I think it's about time steps are being taken back. Essentially, the oil companies have quite a lot of assets, very small assets that really should, as the Nigerians say, should belong to them. So you have oil fields producing 10,000 barrels, 15,000 barrels, that the Nigerians could rightly claim to have the expertise to run. So I think you will find over the next couple of years, over the next 5 years in fact, that a lot of these fields are going to be transferred to the Nigerians, are going to be sold to Nigerians, and the IOCs are going to end up holding on to the big oil fields. So I don't think it's such a bad idea for Nigeria, quite honestly.
Feasibly, though, how is it going to work in terms of financing some of these deals? Because we do know that the market crash of 2009 had a lot to do with the fact that oil companies locally and oil marketers in Nigeria had to incur huge debts from Nigerian banks in order to fund some of their projects, ultimately not being able to finance that debt. So there is the historical issue of not sufficient liquidity to finance major oil transactions locally.
I think you'll find that since 2008, 2009, a lot of the Nigerian banks have rebuilt their balance sheets. There is actually a good level of liquidity in the market today, and you'll find that while they're going into it, while they're going into financing these assets, a lot of them have learned lessons. They have built up their expertise in in financing oil and gas, and they have also put several steps in place to manage the risks. For example, at FCMB, what we have done in the last few months is, just get a hedging policy going, whereby, if there is a fall in oil prices, we will at least be able to protect, the payment of our debts. So Nigerian banks are building up the capability, and you will find that gradually a few of them are going to be doing more of these deals. At FCMB, certainly we've done deals, we're doing deals, and I think Nigerian banks are getting ready. You'll find maybe about 3 or 4 banks who are capable of doing this today.
Nigeria's river state has one of the country's largest economies and is currently going through an industrial revolution. Recently re-elected Governor of Rivers State, Rotimi Amaechi, has pledged to consolidate on issues hindering its development and make the state known as an investor's haven. He spoke to CNBC Africa's Ashley Evans on the sidelines of the World Economic Forum.
Well, anything that has to do with oil is the responsibility of the federal government, not that of the state. But I did hear the president say that this time we will stop importing fuel, because what it actually takes to refine oil in Nigeria is just regulatory framework. If the federal government stops the subsidy on petroleum, then there will be investors that will be very, very glad to invest in the petroleum products. So I hope that the president will keep to his electioneering promises, especially as it concerns the subsidy on petroleum. If that happens, some states may even be willing to go into the building of refineries. But I know that a lot of investors are interested.
There is a petroleum industry bill currently underway. Do you support some of those proposals?
I do, completely, I do. Yeah, I believe that the government has to ease out. They really have to step outside the process of producing crude oil and be just there on the basis of regulatory authority, so that those who are in the industry can deal with the industry themselves and allow the federal government to oversee what is going on. If an NPC wants to participate, they should come in as a private entity and not just be there. They are investors, they are regulatory authority. There will be conflict of interest.
And what bearing is this going to have on River State and its oil industry there?
Huge. First, there is a clause that allows those who own, who not really own, those in whose community you have the oil wells to benefit 10% of the oil coming out from their location, from their community. That will benefit communities in River State. And then there will be a transformation of the oil industry that will lead to more investment, and with more investment will create more employment opportunities.
River State has been coined as an investor's haven. What are you doing to overcome some of the challenges such as security, infrastructure and stability?
The security has improved tremendously, that we're beginning to receive all manner of people from different places. So security is not an issue. And we're currently building 426 primary schools out of the 750 that we plan to build. Out of the 160 health centers that we plan to build, we have completed 100 and they are functioning. And patients are going there both in the rural areas and in the state. There are road infrastructure. SIPEM would complete 180 megawatts of power between July and August. We already have 150 megawatts and 130 megawatts. There is 75 megawatts to be completed. By the time we get to this time next year, we should be having between 600 and 700 megawatts. And the state actually needs about 400, maximum 500 megawatts. So we're working hard on infrastructure because we know that the basis for which you can have such investment is the provision on infrastructure and trying to make commodities that are produced in River State to be competitive with commodities outside the country or even in the country. And this will be dependent on the availability of infrastructures that aid business.